Ready? All right. All right. Welcome everyone to our second Marshall County Investor Meetup. Tonight's going to be relatively pretty special. I think we've got a local lender who's agreed to be our guest speaker. Like we talked about last time, a lot of generic stuff about how to get started and kind of the biggest problems as far as finding and funding. Well, here are the answers to funding. So we're going to have good Q&A, and I've got some questions that are going to be up here to kind of get us started. And then we'll have a generic Q&A at the end. If you're new, please fill out a questionnaire. If you've already filled one out, I've got it on file, so no need to do it again. But just kind of while we're talking, there's a questionnaire there. Housekeeping stuff, drinks in the back. If anybody wants one, and then the bathroom is right back there to the left. I don't think we're going to have any fires or hurricanes or tornadoes, but the exits are right there the way you came in. All right, so tonight we're going to just go around the room again, let everybody introduce themselves. This is a networking group, so it's a good idea to kind of just let everybody know who you are and kind of where you are in your investing journey and what you do in the real world. So you just never know who will be able to provide assistance, or you might be able to provide value to them. Then we'll talk to our guest speaker, and we'll talk about some different things as far as like how to qualify for a loan as a real estate investor. There could be some challenges based on income, based on the property, based on whether or not it could actually get a clear to close or a certificate of occupancy, things like that. So there's different nuances to investing and getting loans for investment properties. Talk about the application process, different loan products that are available for investors, and then what to expect with future meetups. We do have a guest speaker lined up for March, and I'm working on one for April as well. I know y'all definitely don't want to sit up here and just listen to me talk. So if we want to start back here, which ones, the windows or these? All right. Elena, why don't you start for folks that don't know you?
I'm Elena. Promise you a baby by this time. We don't have a baby. But the next one, we will definitely have
Definitely have a baby next meeting.
Yeah.
Yep.
My husband, if we do short-term, long-term, whatever we can get our hands on, we'll do it.
Yep. You've done a little bit over the last 12 years.
Yeah.
Sam?
My name is Sam Rowan. I just want to come out here, just get an idea of what investment looks like. I've done in the past stock insurance, and now I am working for Metro Groceries right now because in the process of having life insurance or to get your license, you gotta pass the test. Yeah, it's pretty tough right now. So I'm going to take it again and see how I do. And also I've done some investment in the stock market a little bit. So that's it.
All right, awesome.
Russell Davis, Mississippi originally. Been here almost a year. Still want to get into real estate investments.
Yep. Yeah.
Mike Hodge with Red Money Group. I'm trying to get educated on investing. This has been very interesting how the investors look at it, because I deal with investors in my job.
Yep.
Plus, just personally, I've always been interested in investing, but never really had much of an education.
Okay. And we're going to talk about, I've got some resources I'm going to show everybody at the end before we depart. Just some resources that I use, what investors, how they're looking at properties, how they're looking at the numbers, and kind of how they're going to arrive at that max allowable offer, what they're looking at. There's different strategies for different things. So if we're looking at long-term rental, that's going to be different than flip, just the profit margins and whatnot. So, Jason?
Jason Chill. Food business. Been in food business for 25 plus years. I'm through. Investment ideas on my brain for the past 2 and can't get it off. And Drew those guys, I want to put this together, and I'm going to let go of it. We're going to be working on a couple of additional opportunities since our last meeting. So hopefully, come together.
Yep.
I'm Melissa Shell, Jason's wife. I've seen more numbers and more property and more spreadsheets.
Yeah, Jason and Melissa didn't know what they were getting into when they said, "Hey, show me some possibles."
Gentle monster.
Yep, it definitely can be overwhelming at first. Yeah, who's next?
I'm Marion Strange. I have a license here at Main Street Realty. And I'm just here to educate myself on investing and learn a little bit more about real estate.
All right, sounds good.
Been all the IT manager by trade, but business of the future. Well, present and future is investing.
Yep.
We have rental houses. And
Yeah, you've built several, right?
and some
Yeah.
commercial property.
Yep.
So, opportunities and opportunities to network.
Good deal. Great.
My name is Drake Bishop. I work at the Dodge dealership and have my own businesses, and I buy commercial real estate and rent out businesses.
Tracy.
Tracy Hogan. My husband Ben will be here in a minute, so the big guy walks in. Well, this week. We've been interested, they know we've been interested in doing this for a long time, and it just seems right.
Good deal. I'm Ms. DonNeeysa Adams.
I'm DonNeeysa Adams. I'm with People's Independent Bank and actually have a rental property myself. So just here to answer questions and hopefully give y'all some direction.
All right, sounds good. I will say it always helps to have a lender who also owns rental real estate. My CPA owns rental real estate. It just helps because they understand the joy and the pain. All right, so we'll just jump right into it. I've got some questions just to kind of get us started, and then as you think of questions, feel free to shout them out. And we probably won't have much Q&A at the end because the whole session is going to be Q&A. So one of the first things that we're going to discuss that I posed to DonNeeysa was basically how to qualify for a loan as a real estate investor, and whether or not the lender looks at just the applicant, the property, both, and I'll just let you kick it off.
All right. And a banker is like an insurance agent. They're only as good as the person you feel comfortable with dealing with, because we all offer the same services. So I'm here. I'll be happy to help, but not to try and solicit everybody's business. I mean, that's, it's just finding somebody that you feel comfortable with to sit down, talk with, discuss the different options. With our bank, we actually look at both. We look at the person, because you have to be credit worthy to be able to buy and invest in real estate. If not, we don't want to be in the real estate business. We don't want to be in the car business, so we do look at the collateral, but we also actually look at the borrower themselves. That's one of the main things. Let's see.
Yeah, can the income of the property based on your strategy help?
Definitely. Especially if it's a piece of real estate that's already been a rental property. If you're looking at, I'm working on something right now, it's a group of townhouses. They're all rented. So we can look at the historical rents on those, the rent roll, and we can use that to help qualify as far as the debt to income, to make sure that you do have enough income to cover the debt. That is one of the things that we look at, as far as most people that buy a big commercial property are not going to have enough personal income to be able to come up with a payment on that commercial property. So we'll actually look at what has that commercial property been renting for? Are you going to increase the rents? What's the stability of the renter versus, if it's something. Right now, we're in a very precarious market as far as commercial property, because if you have a strip mall that is service oriented, people are going to buy groceries first before they actually go and buy the services. So, we look at the things like that too, to make sure. And then we always do occupancy rate. So we'll see, we'll reduce and we'll look at the expenses. How much is the insurance? How much is the taxes on it? And we take those into consideration as well when we come in up to what the debt service is on that piece of property. And that's something we like to educate. I know I'm working with another lender right now who's their customer is wanting to build to rental properties. Well, with the cost of materials and the interest rates, what they can rent that property for is not enough to cover the debt. So they would have to come out of their own personal pocket. So right now is not a good time for them on their situation to invest in that. So that's something that, you talk with your lender about to see, is it a wise investment right now?
Gotcha. So it's safe to say that you look at each situation
Definitely.
and all the different variables that go into that individually.
We do. That's something that most lenders will do. They'll sit down and look at your whole situation. If you're on a fixed income, if somebody moves out and it takes 2 or 3 months, will it bankrupt you literally to not have a renter or a tenant in that piece of property?
Gotcha. And then, so this pops up a lot as far as investors trying to get started, whether or not, if they don't have a lot of cash saved up, or maybe they just bought their own house and then it's 6 months down the road and they haven't really kind of built up that nest egg again, but they're interested in getting started in real estate investing. What are some of the options that they could potentially still?
We get real creative. Different lenders look at different things. I'm just going to talk from my perspective. I've been in banking. I started when I was 6 and I've been in it 34 years.
Yeah.
So just throw that one out there. But I have, it's looking, one, do you have equity in any property that you already own? So do you have equity in your personal house? Do you have some lots or some vacant land that we can use as the equity instead of you actually physically coming up with cash? If you have cash, we also look at putting it in an investment account, because I have found in all my years of banking, you'll pay the bank back, but you won't pay yourself back. So if you've got $20,000 sitting in a savings account, let's put it into a CD. You're going to earn interest on it, and we'll just hold that money. So at the end of the time, as you pay it down and as that property increases in value, you still have your money in the bank. And that's something that we like to look at, because cash goes a long way, especially, having the assets. So we look at, do you have equity in another piece of property that you currently own? So it's a $150,000 piece of property. You only owe $50,000. You've got $100,000 in equity that we could do a second mortgage on that piece of property too. So actually having cash to come to the table, we have ways around that, as far as looking at different options.
Now, as far as a second mortgage on equity, am I paying a separate amount on that second mortgage, or is it just a lien against it?
It's just a lien against it. It's the way that we structure it. So you only have that one payment. So your rental income will cover that one payment. We'll just take a second on an additional piece of property.
Right. But there's no additional monthly cost,
Right.
which is I've worked with many banks. I've never had maybe other banks do that. I've never had them actually offer it and say that we do that. So it's a very unique strategy in, being able to use equity in a property, but not actually take a real second mortgage. It's a second mortgage, but there's no additional payment, which
Right.
is phenomenal.
You're not paying 3 payments versus the 2 payments.
Right.
That's
Yep.
a great deal, by the way. In the lending world.
Yeah.
Most people are going to require you to make a second.
Uh-huh. I've asked other lenders, and they just look at me cross-eyed. Yeah, they're like, no, we're going to want money for that. So,
Like I said, we look at being an independent bank. I work in Boaz. Independent banks look at a lot more things versus you have to fit in a box, which I know a lot of the secondary market, your FHA, your Fannie Mae, Freddie Macs, those type VA loans, your credit score has to be this, you have to have this much cash, and you have to fit in this little box. And like, that's what I was saying from the beginning, is you find somebody that you're comfortable with, that will sit down and look at your whole portfolio to see what actually is feasible, that's a good investment for the bank, but a good investment for the borrower. Yeah. We look on both sides.
Any other questions about qualifications before we jump to the next? They're all related, but all right.
And if I over-explain, y'all just tell me to shut up and move on.
No, it's all good information. So what I think it helps, and I was taught this early on, to go ahead and show up with a binder with everything that the lender's going to want anyway, but it shows you're prepared, it shows you did your homework. So what type of information could folks go ahead and do prior to, so that way they're kind of being efficient with their time to show up?
Are y'all all familiar, and I don't want to dumb it down, with a personal financial statement? Are y'all all, I brought some blank ones just to kind of give y'all an idea of something, and you can do an Excel spreadsheet, or you can jot it on a piece of paper. But this is just, I'm sure you're familiar with these, being in the lending world.
I've seen one or two.
One or two in your lifetime. All right. But along with, we like to look at historical data. So we really like the last 2 years' tax returns. And then if we're in the early part of the year like we are now, a W-2 or 1099 from the previous year if you haven't filed your taxes. And then a personal financial statement. This just gives the lender a snapshot of what do I already own and what do I already owe. So you've got your assets on the left side in the first section, it's just, and these are just general. It doesn't mean you have to look on your online banking app and get exact numbers to the penny. It's just, I've got $10,000 cash in the bank and combined savings, checking accounts. I own 3 vehicles that are worth approximately this much. I've got real estate. I've got my personal house that's worth this. I've got some farmland. I've got a rental property. It's just listing what the values are on that versus what your debts are. So that's one thing that all lenders like to have. So if you have one prepared up front, like I said, you don't have to use this one, just something on a spreadsheet, just something written down. But that gives us kind of a snapshot of where you're at in your financial portfolio. If you don't own anything, that's okay. It's, we can help you overcome that. We can look at different ways, to improve credit scores. We can look at different, this also gives us where you might have equity that you didn't think that you had. So it gives us an idea, okay, well, I don't have the cash to come to the table, but I own this piece of property free and clear. So that's a personal financial statement, 2 years tax returns, and of course a valid ID. We have to have a current non-expired license. But that's all that you really need just to come in and to apply.
And something you said really triggered something for me is a lot of folks will think that they can't, it's not the right time or their finances aren't in order or whatever the situation is, but I would highly encourage anyone to sit down with whatever lender, whoever you're interested in speaking to, and let them tell you no. Or not really no so much. Of course, there are certain banks that will just say, no, we don't do that type of product, which is fine. It took me 12 before I found the one that would, for my very first investment property. But the answer, if it shouldn't be no, it should be not right now, but here's how we're going to get you there and however long. Here's where but they can't do that if they don't know where you are.
Yeah.
So they need to know where you are. I think the answer to that one is self-explanatory, is whether or not you need to have a property in mind. And that's kind of what we just covered. Or would it be valuable to go ahead and sit down, see where I am? And then it kind of gives you, like the very first time I did that, I sat down and I was qualified up to a certain dollar amount. And then I started looking for properties, because it doesn't do you any good to look for something in the 300 range if the lender's only going to approve you up to 150 based on your personal financial statement and everything else. So that one's pretty easy. How important is it to build a relationship with the lender, and how could the loan application process differ once you kind of have a track record established?
And that's a really good question. That's what I started out with, is finding somebody that you're comfortable with, somebody that you can sit down, you can talk to, develop that relationship, because we all lend money, we all look at credit, it's just finding somebody that you feel comfortable with, that you're not just a number. And that's the most important thing, is finding somebody you can develop that relationship with, because from the first time that you look at something till then they find a big commercial property that they're looking at, $400,000, and then invest in another $500,000 remodeling and redoing it, you already have that relationship built up to where it's like, okay, yeah, there's no problem. Go find what you like. We'll look at it. We'll make it work. So it's all about building that relationship. And
All right. What different types of loan products are available to real estate investors?
there's all kinds. It depends on what your end goal is. Whether you are wanting to flip a house, with a flip house, the way that we would structure it. So let's see, what prize does he get for being late? But, if it's something that you want to get an immediate return on your investment. So you find a $70,000 house and you want to go in and, redo the flooring, put a new roof on it, remodel the kitchen, bring it up, and you want to turn it into a flip house. Something like that, we would look at what the value is as it sits right now, what you're purchasing for, versus what would it appraise for once you do those improvements. So we would get you an as-is value and a subject to completion value. And then we would set that up to where you wouldn't be strapped with a large monthly payment on something that you're not having income coming in on. So we would do like an interest only. So we'd do it for a year, draw note, so that way you've got money to do the improvements. And so all you're required to pay is what the interest is on that. Once it's complete, hopefully, you finish it in 6 months and then you put it on the market to sell. So that way you're not sitting here strapped to a $1,000 a month payment that you don't have any income coming in. So that's, on a flip house, or if it's one you want to remodel before you're going to put it on the market to rent, we would do the same concept. We would set it up on a temporary basis, let you go in, do the improvements that you want to, and then put it on permanent financing. With our bank, we look at if it's just something that's already rented, that it's an older investor that's wanting to get out of the rental business. It's already rented. It's going to have the same tenants. Then we would just go ahead and put it on monthly payments. So normally we set them up on a 5-year balloon note with a 15-year amortization. So we would set your payments based on 15 years, but your interest rate's fixed for 5 years. And that's one of the things with an independent bank. One of the drawbacks is we don't know what the future is, so we're not going to lock in a low interest rate for 15 years. So the first 5 years would be at a set rate. At the end of that 5 years, we would reassess what the rates are at that point in time, adjust your rate, renew it for another 5 years.
Would that adjustment be based on a new principal balance?
It would be based on what the new principal balance and what the current interest rates are.
Gotcha.
So we have a lot that are coming due right now, and I feel sorry for them because they were at 4.25 on a fixed rate, and prime, as you know, is up to 7.75. So they have to look at maybe adjusting their rents to meet the current market.
Gotcha. But at the end of that 5 years, theoretically, you owe less. So it
Exactly.
may balance out based on the interest rates, but
normally does.
Yeah.
And we'll stress that and then look at it, you know, we'll do a 3% increase up front to make sure that the rents, that it's still going to pay for itself,
Yep.
you know, depending on what the market is. But also if you invest right now at a higher interest rate and interest rates go down, we can always adjust the rate and the payments during that 5 years. You're not just locked in. We don't do prepayment penalties.
How many times will you do it? 5 years?
No, the rate's fixed for the first. Oh, to lower it
Yes.
as many times as you want.
Oh, really?
Yeah. Yeah, you're locked in on that higher rate, but if rates go down, then we can adjust it.
Is that basically just changing the rate, there's no more closing costs?
Right. Yeah, it's just a rate. We do a single modification form. It's just a one-page modification form, changing terms. We agree upon the new interest rate, and then we reset it.
All right, so that we talked about the renovation. So going back to the renovation loan, if it's for a flip and the plan is for short term, get a return on your money pretty quick, what does the down payment look like on that $70,000 scenario?
Typically, we loan 85% on a 1 to 4 family project, 80% on a commercial or multifamily project. So it's a 15 or a 20% down payment.
Okay.
And that's where that equity or a cash CD loan type thing comes into play too. We always like for the investor to have some skin in the game.
Sure.
You know, that's, we
But
don't
like
want you gambling on all of our money.
but like you said, so on a $70,000, you're putting 15% down instead of coming out of pocket, basically 10 grand. You are, but the 10 grand could go into a CD that earns interest while
Right.
it's stuck, for
Yeah.
the lack of a better, and then you're using that as the equity, the
Correct.
15%. So the money's not gone. It's not just dumped into a property. It's still sitting in the bank.
Yep.
And then you do the
And as you pay down on the principal, you can release
Yep.
that CD money, so you
Gotcha.
still have your own money in the bank.
So it's still staying.
And you're earning interest on that money.
Yep.
Yep.
Yep. And then, so to take that one a little bit further, if you have, so as long as you have the money for, now you mentioned renovations and being able to draw, how would that look like if you put 15% down and it's going to take $30,000 to renovate on a $70,000? Where does the $30,000 need to come from? The investor, a partner? Does the bank help in that? How would that look?
All of the above.
Okay.
I choose D.
I like, yeah, it depends.
It depends. It really does.
I like flexibility.
Yeah.
Okay.
Yeah. My favorite motto is "Blessed are the flexible, for they can't be bent out of shape." So that's your nugget for the day.
Write that down.
Yeah. Blessed are the flexible, they can't be bent out of shape.
That's good. That's good to know. Because I've seen all three. I've participated in all three. You know, I've used HELOC money for renovations. I've used partner money for renovations. I've used private investor money for renovations.
Yeah.
Used bank money for renovations. So it just depends on the deal.
Right.
What is it that's not
Anyhow.
Always.
Yeah.
I mean, do you look at the market and certain seasons?
And it really depends on where you're at and what you're looking at buying. Because right now, some people are getting out of the real estate market. And so it becomes more of a buyer's market versus 6 months ago, we were in the seller's market.
Yeah.
Completely. You know, it was whenever you had a listed price and people were bidding over that listed price, that was definitely a seller's market and one you did not really want to buy investment property in. We've seen that flip now with the higher interest rates.
Mm-hmm.
So it's beginning to be more of a buyer's market, and there has been a stay on foreclosures for the last couple of years because of COVID.
Right.
Foreclosures are about to be coming back open. I foresee by the end of the year, we're going to have, there's going to be foreclosures out there, which brings up a whole nother conversation. But, if you're looking at investing in some property, foreclosure properties for long term are good.
Yeah.
Like I said, we can go down that rabbit hole a little bit if you want to with a foreclosure. They do have a right of redemption, so they do have up to a year to come back and catch up their payments, and you're left without a house. So that's why you can't buy a foreclosed property as a flip property without holding it at least a year.
That actually made me remember something too. If you're doing a flip, and correct me if I'm wrong, because Alabama may be different, but I think it's national. If you're doing a flip and you do it quickly, say it only takes you 2 months, you put it on the market and you get a buyer who's bringing an FHA loan. If I'm not mistaken, there's a 90-day seasoning for FHA
Yes,
loans.
there is.
Yeah. My brother ran into that. They had to extend closing past that 90-day mark because the FHA would not allow the buyer to purchase a house that short term. The house had to.
Right now,
Yeah.
Short-term flip, and my borrower was buying it, and if you are too good at what you do and make too much money, you may require a second appraisal on top of the first appraisal, and the borrower cannot pay for that. So that would be out of the
Investors.
pocket, your pocket, somebody else other than the borrower.
Yeah.
So this can expense,
It's just one of those things to know about, so you're not
Right.
caught off. My brother was caught off guard. It was his first time doing that. Now he's seasoned pro at it. So it was just one of those things. Like, have you ever heard of this? I said no, but that sounds like a pain in the butt. Just leave it to the government to get in the way.
Of course. But it's also for the buyer's protection too. So
Sure.
you don't buy a house for $100,000 and turn around in 30 days and list it for $200,000.
Yeah.
So.
Which, by the way, Jason and Melissa, that property I was looking at, it looks like. Well, we'll talk about that later. But it looks like a situation that she just
Yeah.
mentioned.
It's putting lipstick on the pig and saying
Right.
that it's worth a whole lot more.
Well, actually, no. I take that back. I think that's a different thing because it's a HUD property.
Okay.
So I believe the price that's listed on the public records, I think that's probably what the bank, whoever repossessed it, did. So never mind. That wasn't a quick sale. I just remember that.
Yeah.
Fix and refinance and the longer amortization, which is what you just talked about. Starting off with interest only for a certain time frame, get the renovations done, put a renter in place, and then converting it into a 15-year AM on a 5-year balloon.
Yep.
What do you think about having? Is it necessary for an investor to have an LLC for an investment property? That question comes up all the time, and it's also one of the stumbling blocks. People think, "Oh, well, I don't have this set up, or I don't have that in place." And there's a lot of obstacles that we like to throw in our own way. But from the lender's perspective,
From a lender's perspective, LLC, you don't have to have an LLC to own rental property. Because with an LLC, you're still going to personally guarantee the loan. So it's really of no benefit from the loan side. That's where your accountant comes into play. Talking with your accountant and your insurance to see, are you going to be personally liable if somebody gets hurt on that property? But from a banker's standpoint, we don't care.
Yeah.
We don't care if you're incorporated or.
Won't allow you to buy as an LLC. They will require you to buy as an individual. And then what you do with it after that, don't ask, don't tell.
Mhm.
But they won't allow an LLC to purchase the property. I know most of them.
Yeah.
We have some of the biggest lenders, but the biggest lender in the country, plus a bunch of in the top 20. So that might be something you probably ought to talk to the CPA about before you
Mhm.
Yes.
try to structure it that way.
Yep.
Yeah.
And just from personal experience, so like she said, we always have to personally guarantee whatever the loan is. That's where your financial statement comes in. That's where your tax returns, your personal tax returns, also business tax returns if you do have an LLC. But I've been with banks in Virginia, North Carolina, Florida, and now here. The property's still titled in the LLC,
Right.
but my name is personally on the loan.
Yeah.
All right. I think that's all. That's the only questions we had that I was bringing up just to kind of get the discussion going. Does anybody have any further questions for as far as lending and borrowing and cash needed to bring to the table, or because we could probably go on for a while with different scenarios.
Yeah.
Are there minimums on your commercial deal? We don't do commercial. So are there minimum amounts on commercial property? Or what you would be willing to loan?
No.
No.
We'll do anywhere from a $2,000 loan to $10 million loan. So.
All right. Anything else? All right. Well, good deal. Before we do this, I can run through this. We can hit. So I know you've got some goodies. I don't want to pass that up. But so if you want to talk more in detail about your specific situation as far as your investing goals, what you want to do, feel free to reach out to me. Everybody should have a business card. Again, if you don't mind filling out the contact info, I mostly need your email, but then also kind of give me a rough idea of what you're possibly looking to get started investing in or continue investing in, the location, the areas, and then we can schedule a sit down and kind of go through your personal situation, because everybody's going to have different set of criteria that they're bringing to the table. I'm going to add you no solicitations, but the email will just be a way for me to keep in touch with just good information you'll get on a weekly basis. And then, of course, the business card's got my website on there. Something else I'm going to add, which I'll show you in a bit, but just some different tools and things that you can use when you're looking at properties and kind of evaluating properties, seeing what the potential rate of return is going to be. We'll go on to Facebook. A lot of stuff gets posted to Facebook on a daily basis, Instagram, LinkedIn. What else do I have it attached to? I don't know. All of them, I guess. All the ones that you're supposed to these days. Yeah. Not my favorite. In fact, I hate the fact that we're live here. Anyway, no, it's good information. But yeah, going forward, it's always going to be the last Tuesday of every month. Just something that you can schedule around and kind of keep in mind. We're going to have different guest speakers every time. Next month is going to be Mr. Jerry Lowry. He's a general contractor in the area. Has been here, been in this town for quite some time, and knows the area, knows the people. Baptized my father-in-law in the river, didn't he? Was it in the creek? That's the way to do it. So he'll be talking to us next month. Following that, I'm looking at talking to or having either a CPA or a potential closing attorney come talk to us about 1031 exchanges, some of the different tax strategies that go along with real estate investing and just all that fun stuff. So before the Q&A, I know Ms. DonNeeysa had some things she wanted to potentially.
I gave you all the things. I've got business cards if anybody wants a business card. And if you want a goodie bag, I went upstairs to the marketing and just kind of stole these, so you don't know where. No, I'm just kidding. If you want one, you're welcome to it. If you don't want one, that's fine too.
I get the feeling you can kind of just do what you want at the branch when you're one of the vice presidents, or is that?
Do what?
I say you can just kind of do what you want over there?
Yeah, kind of.
Who's going to stop you?
Just one for y'all? There you go. Yeah, these are good heavy duty ones. You want one?
Sure.
You're welcome. Y'all each want one, or y'all?
I definitely want. Okay.
You definitely want
I
one.
didn't get one the other day.
Ah,
Oh wait, Elena, you already got one. No, I don't need to. I don't need to.
you don't need to.
I don't need to.
Are you sure?
I'm sure.
All right. Everybody got a good old tape measure. You want a card? There you go.
I will say this, and it's something I said last time,
There you go.
and she hit the nail on the head as far as finding somebody that you're comfortable working with, somebody that's a good fit. I have a couple of loans with People's Independent. I have a couple of loans with Citizens. I have loans with a bank and a mortgage broker in Tennessee. Each for a different reason. Yeah, 2 different banks.
Yes.
Still 2? Oh, those were 2 different? Oh, Pollux was with the other one. That's right. Yeah, so there you go. 2 different banks in Virginia. It's easy to keep it. Which one's in Florida?
The first, Oakland Community, and
Oh, had.
the beach.
Had.
Yeah.
Had. Yeah. Right.
Past tense.
There's probably still accounts open too. I think we still have $5 in an account in North Carolina.
Oh, they've dormant charged you.
Oh yeah.
On that, I'm
Yeah,
sure.
get that back. But anyway, the point is having different tools in the tool bag to fit different jobs. Having an independent banker because you need flexibility is huge. Having a mortgage broker who can shop around and find a different product that you might need for that specific situation is huge. Having a credit union who has a good HELOC rate or something. You just never know, and you always want to shop around. I think you said that in the beginning.
Right.
You need to shop around. But and I'm not just saying this because she's sitting here, but I've never seen the flexibility that People's Independent can do anywhere else. And we just listed a ton of banks that we've worked with, all great for different reasons. I'm not, they're have all been great and have all helped us out and helped us in our investing journey. But I've never seen this type of flexibility. Not having to put 20% down at the closing table where you can put it in the CD, that is just unique.
And that's the big thing. Money is always such a big hang up for people. And they're like, you don't have money, you can't do this. Make it the lender tell you no. Because all these things that you don't you can use equity in a property, it's just you don't know what you don't know if you've never done this. And so
We still learn every day. We're trying to figure out how to buy a condo in Florida, and I expect a lender to tell me no.
Drew said, we're gonna keep going until somebody tells you no, and I was like, I know, because if there's a way we're gonna do this, we're gonna do this.
Right. And the bank will not let. It's correct. Tell me if I'm wrong. The bank will not let you get in trouble.
No.
Because they're going to look at the deal, especially working with investors. They're going to look at the deal as we should be looking at the deal, and maybe we're just missing something. I've had lenders tell me, no, that's too much for you. You can't do that.
Because it's like, I'm gonna need you to tell me that I'm crazy. Can I do this?
Didn't I say that?
Yeah, you did. First time I met him.
I'm going to pitch this idea. You tell me if I'm crazy. I really thought she was going to kick me out of her office. Like, hell, I'm not doing that. I don't even know you. But she's like, no, we
can make that work.
We'll make that work. And I was like, okay, all right. So anyway,
So don't be scared.
Yeah. There's always a way, and the answer, like I said before, maybe it shouldn't be no, but it could be not right now, and that's perfectly fine, because then it's going to set you up like, well, this is what I really want to do.
How do we get there?
I can get there in 6 months. I can get there in 3 months. I can get there 2 years. But as long as real estate investing is a get rich forever type thing, not a get rich quick. It's absolutely marathon. Yep. So, any last minute questions? Oh, let me show you these resources. So I know a couple of you from the last meetup. We talked about biggerpockets.com. Let me show you what one of their tools looks like. And you can get several of them for free. So biggerpockets.com, it's a real estate investing community. It's almost kind of like the Facebook of the real estate world. real estate investing world. It's a hub where people come and pose questions and make posts and contribute, and they have a and they're not paying me to say this, by the way. If David Green, you're watching, this is free advertising. Not that they need it; they're perfectly capable on their own. But they've got a podcast. If you go to your favorite podcast player, I know Jason, you already talked about. Well, they got up to like 700 now. It is an insane amount of podcasts. My brother turned me on to it a few years ago. And what I love about it is just a no nonsense. It's kind of like just sitting around, just having a conversation about real estate investing. They're not trying to, they will sell you stuff. In fact, if you want the premium, they'll charge you for this. But most of it is free, and all the good stuff is free. The tools that is important to know about are these different calculators. If you're looking at a property as a rental, they've got a calculator for that. If it's going to be a fix and flip, if it's going to be the BRRRR, the buy, rehab, rent, refinance, and then repeat, they've got a calculator for that. A rehab estimator, wholesaling, mortgage payment, they've got a calculator for that using the 70% rule, which we haven't talked about. Or if it's going to be an Airbnb, these calculators are already pre-built, and I can't remember how many you can do for free before they start charging, but it's several. It's worth checking out. Then you've got some other things to estimate the rent. Now, one thing that is for free all the time, which is going to be a link on my website soon, is these financial apps on intouchsystems.com. This came from a gentleman that owns this company, teaches real estate courses to real estate agents. That's how I got my real estate investing certification, was through his course that he offered to all realtors in the nation through the RRC. So different calculators. Just this is the most accurate one that I've seen. So if you're looking and you just want to figure out what your payment's going to be, and this is a lot for buyers and sellers, but for rent versus own, if you want to see how much money potentially is being given to someone else because you're a renter or want to stay a renter, it just kind of shows you those types of things. Homeowners analysis. So these are good resources. Shoot me an email if you want links to those. Pretty easy. Biggerpockets.com or intouchsystems.com/apps/financial apps. So that's all I have as far as that goes. I think that is about it. Once we finish up, we're going to stick around for a minute, but then if you want to continue discussing in a little more social environment, we're going to head over to Busted Oak and go visit Doug and Wendy.
You can order from bootleggers and they'll bring it right over to you.
That's true. They will. It's the only way I've had their pizza, and it is phenomenal. Anything else? All right. Well, thanks so much for coming. Hope to see you next month. Again, stay in touch. Shoot me an email if you want to sit down and have a meeting. I don't have calendars like I did last time to actually sign up for a slot because I don't know with the baby. I don't know what my schedule is going to look like. I'm having a start. I was busy all the way up until right this minute. The rest of the week is kind of, the next, I'll have a baby next week. So might be out of pocket, but I'll definitely be in touch. We can do a Zoom meeting. Or I live 5 minutes away. We can always, I'm sure the baby will sleep sometime, so I can always run up here. We can just meet right here. So, Sam, do you have something else?
I was going to say, you have a session last Tuesday.
Every last Tuesday of the month. Yep. And we'll have a guest speaker every time, so y'all don't hear me flap my gums too much. Hopefully just try to keep the conversation fun and interesting, and I'll throw in here are the mistakes I've made over the years, so let me help you not make those mistakes. So, all right, that's all I had. Thanks so much. Thanks to Miss DonNeeysa. Appreciate your time and coming out.
You're welcome. If I